To trade successfully in Forex, you must be able to understand the trading signals that can contribute greatly to your profits. Select a chart that describes these trading indicators and rationally opt for a trading system that can optimize the benefit of these trading indicators. These signals can help in making important decisions regarding market entry and exit, or to make any adjustments in currency exchange. Technical indicators describe the trading facts and figures by making certain mathematical calculations and state the time period that was selected for reckoning these indicators. Charts in Forex display continually updated exchange rates of various currencies, the upward or downward trends, and the technical indicators. Every chart is being updated after a specified time period. You must be acquainted with these charts and the technical indicators before making an investment. It is a sensible norm to consult the charts before making an entry to foreign exchange market. You can even consult multiple charts to figure out the best time of entry. After mastering at entry signals evaluation, you must pay attention to the exit signals. Consider many options from trailing stops, fixed stops, and limit exits that you can use for your exit. If you intend to make short trade, try concentrating on turning points by understanding any short-term pattern which can recur in long run. Monitor the currency pairs to figure out any such swing. Usually traders prefer to set a higher percentage for a short period, opting for the limit exit. You can also consult exit signals that are based on real-time transactions, to make a decision regarding your exit. In addition to consulting the technical indicators carefully, you must use a signal that best suits your conditions. Instead of making a decision randomly, you must stick to a logical mechanism. Try using multiple signals in accordance with many parameters that will lead you to risk aversion. Evaluating various Forex signals along with technical indicators allows you to control your investment and anticipate the possible fluctuations in market. Trading in Forex requires rigorous attention and observation, and any negligence can cause big losses. Technological advancements have made it possible to analyze foreign exchange market 24 hours a day through internet. You can even buy and sell currency on phone, because the need of physical presence has been eliminated in modern Forex trading. Nowadays, if the Forex trading indicators meet the defined parameters, you'll receive an alert to invest or sell your stock. To ensure the maximum possible gain from your investment, decide on following the trading signal of an experienced service provider's signals. You must find out the best trading system that suits you. Logical evaluation of figures and signals allow you to grab the right opportunity. You must conduct a thorough research before making a transaction, and don't just rely on one source. Read reviews, online trading forums, business newspapers, and magazines on foreign exchange to deeply understand the underlying system of foreign exchange trading. Use software to evaluate signals or a method developed by any foreign exchange expert. Make notes and find out the right trading system that works for you. For more exciting videos, please click the subscribe button below. Thank you for watching You Trade Forex channel.